Big news this morning. 11.24 million tons of LCE at 3,010 ppm Li. So basically 0.3% is the average grade of the deposit. And you've got over 11 million tons of, this high grade in a great location to have it. So tell us about this morning's news, Graham.
Well, Robert, I'm actually still trying to catch up with all the analysts who are digesting this news, and it's it's rather overwhelming, to be quite honest. I mean, I just reading the Sprott report. They've lifted their price target to 390 from $3, and they're pretty bullish on this deposit. I'm looking at one from 3L Capital, and to put it in perspective, what 3L Capital is saying that, as you say, 11.2 million tons of 3,000 ppm. That's the equivalent to 47 million ounces of gold at 2 grams. And if that doesn't leave you scratching your head and going, how has this thing only got a 50 million market cap? It should be, because it's truly an outstanding resource.
So I noticed in the drilling in 2024 that you guys have been doing, the grades have been going up a bit, and I guess you've been testing some areas in the southern portion of the project. Can you tell us about what's helping you with targeting?
We're still targeting off our original geophysical signature, which basically covers 90% of the land that we control. So it's nothing new that we're targeting in terms of geophysics. It's just since we were operating under that limited 5 acre disturbance, there was only so much that we could drill. And matter of fact, a couple of the holes that we got in this year at the southernmost extent of our property were resultant from being able to remediate some of the previous drill holes and allow us to expand and do a little more disturbance. So that's what we've been operating under. And, in a nutshell, that's what really blows me away is that we've uncovered this world-class resource with a very limited drilling campaign, limiting it to 5 acres of disturbance, not even targeting the best geophysical anomalies. So I'm really looking forward to the next stage of permitting and the next stage of drilling, and I think this thing only gets bigger, better.
So how much has Surge spent to date in terms of putting together this, 11.2 million tons at 3,000, average grade?
Yeah, it's easy for me to calculate because we had almost 10 million in the bank last year, and we're down to over 3 million this year. So I would say, in a nutshell, it's taken roughly 5 million USD to unearth this deposit.
Only $5 million, really?
Yep, it's amazing.
So this resource has an in situ value, and I know that's fraught with risk to quote that, but it's $30 billion of carbonate that you have in the ground there. That's incredible, return on investment for only $5 million.
Yes, and that's really the nature of the deposit being a clay deposit. It's not like gold where it can be, different types of deposits, very tight drill spacing, takes a lot of drill holes to get to reserves and resources. And in our case, it's more like a coal seam where, we can drill 500 meters apart and still incorporate that into the resource. So it's due to the nature of the clay deposits. And to put it into
Hmm.
perspective, like you said, 4 billion, we're getting a valuation which is like $4 a ton LCE in situ, and most of our peers are 10 time multiples of that. So as we continue to de-risk this thing, put more holes in it, I think the value only rises.
Okay, so with this, resource out today, you also said that you're planning to advance to a PEA in Q1 2025. Is that right?
That is correct.
Okay, so that's important because it's one thing to drill and show you have a big deposit, And it's another thing, especially with met testing and some of the chemistry involved in processing some of this clay, putting some real sort of economics around it is incredibly important. So what are the key milestones that Surge has to achieve in the next 6 months, in order to publish that maiden PEA?
Well, that's an excellent question, and I think smart people like yourselves are asking that question. And it's not like we're just starting the PEA now. We've been working on the PEA for the last 6 months. One of the key things we've been waiting for is the updated resource. So now we can plug this into the ongoing work we've been undergoing with M3 engineering on the PEA. So this was one of the final things we were waiting for that now we can plug it in. We've been doing the Met work with Cometco, and this has all been happening behind the scenes, and all these things are going to be plugged into the model and released in the first quarter. And like you say, it's one thing to have lithium, but what's most important is that we can show the investor that we can pull this lithium out of the ground economically and make good money at it. And one of the things that's important to note is it's not new rocket science that we're going to introduce. We're going to use the same flow sheet as Thacker Pass. It's tried and proven, and we're going to show the world, because we've been saying that this project is as good or better than Thacker Pass. Well, guess what? Time for us to prove it, and we've been proving it with the drilling, and we're going to prove it with the PEA.
So, with the clays, for people who don't understand the difference between hard rock and clay, it's kind of important. There are hard rock, mines around the world. I'm not sure that the clays have been fully proven yet. And based upon what I understand, the clays are a little more expensive to extract per ton. Like it might be like $5,000 or $6,000 per ton to process the LCE clays, and it might only be 3 or 4 thousand a ton to do the hard rock clays. Is that your understanding as well? Are those ballpark, about right?
Yeah, those are ballpark or outright, but what you need to keep in mind is that the hard rocks aren't producing lithium. They're producing a concentrate, and that concentrate is sold to China, where it's processed, and the high value added component where you're processing lithium is done in China. So you're not getting the end quality lithium carbonate high value margin product that we are going to be creating out of the clay resource. So that's a very, very important distinction. Is the spodumene, yes, it's cheaper, but you're not getting the value in the end product because you're selling a concentrate. We will be producing lithium carbonate, which is and even we might even be looking at lithium hydroxide. We're not there yet, but those are the two premium products that will be produced. So yes, higher cost to extract, higher cost to produce, but we're much higher margin at the end.
So what I hear you saying is that your intention is to do all the processing, put everything in the U.S. That you're not shipping anything to China.
180,000% not
Okay.
shipping to China. This resource is not going anywhere. Lithium's a strategic mineral in the U.S. of A. This is not going to China. This is going to be produced in the U.S., made in the U.S., sold in the U.S.
And maybe I'm getting a little too far in the weeds here, but while I have you, we might as well delve into it. So what's the difference between carbonate and the hydroxide, and how complicated or how expensive is it for you to do the hydroxide, instead of the carbonate, or to do both?
Yeah, hydroxide is just a more premium product that certain battery manufacturers will want. I mean, some battery manufacturers might even just want technical grade lithium, which is even cheaper to produce. So it's going to depend on the end user whether we go technical grade carbonate or hydroxide. And like I say, we're not there yet. We're de-risking this thing, feasibility. At the end of the day, the investment from the off takers will determine the type of product that we will produce. But it's not a big step to go from carbonate to hydroxide. As an example, you're just adding a CO2 plant at the end. It's not a big capex. Most of the capex is involved in getting to carbonate.
Okay. And I mean, obviously, look, Surge is in a great mining state. Couldn't be better. The location is about as good as it gets, in my opinion. Have you had any conversations with Tesla or any other big, American car manufacturers?
Well, that puts me in a tough spot. Um, but I'll just say this. I can just say that anybody you think who would be interested in this deposit in this location knows about it, has probably been there, is looking at it. I do expect that this being the best lithium resource in the USA, it will attract a strategic at some point. I'm confident.
Okay. Yeah, that makes sense. I mean, it's got to be. I imagine that the deposit itself is only about a 5 hour drive from the Tesla factory. I think it should be 4 or 5 hours, right?
We're all in Nevada.
They're all in Nevada. You just gotta drive west. Um, so I'm interested in learning more about how you can get grant funding from the government. So they did this Inflation Act last year, or was it the year before? I forget. And there's all this money for battery metals in theory. I know a few juniors in the U.S. like Talon got some government grant funding. Is that something Surge has contemplated? Is that something that you are pursuing in any way?
Yeah, certainly. We follow, the funding that other companies have gotten, specifically, the DOE funding for Thacker, 2.3 billion. Ioneer just received money as well. I mean, I'll just quote Sprott's research report today. Put simply, we think Nevada North is firmly the world leading deposit of its type and should qualify for strategic U.S. government funding. And the reason they can say that is we will qualify. But to be clear, the funding that these companies get is for DOE funding is for construction, above ground financing, and we will certainly qualify for that. We just need to get this point of bankable feasibility, where we go out and start accessing that type of funding. And like Sprott says, we certainly qualify, and we certainly know who the people are that we need to talk to, and it's one of the things that we'll be engaging with forthwith.
Okay. And so is the PEA a very important key milestone for you to get like more access to those funds?
It's the first step that shows that this is an economic deposit sitting here in the US of A, a highly economic deposit. With that PEA, we will start the process of engaging in talks with the government on funding. That is really the first step that's going to, you know, make this project stand out and get the attention of the people that we need to get the attention of in Washington.
Got it. Okay. Um, so this is September. Your guidance is PEA Q1 2025. So I'm just going to assume it'll be March. So that gives us about 6 to 7 months. What are some key bits of news flow that you expect Surge to have over the next 6 to 7 months as we lead up to that PEA?
Hey, Robert, it's always feeding the beast with continual news. So I just came out with great news, but that's yesterday's news now, and I got to come up with more. But rest assured, there's lots of things coming. I mean, one of the key things to look for is our plan of operation approval in Nevada, because that's really going to be the next stage of exploration, and that's going to drive next year's program. So look for approvals there. We've got some other things in the works. Tying up the private land, do an agreement there. There's water rights. There's all kinds of things we're working on behind the scenes to strengthen this project and de-risk it, and we'll be announcing them as we move along.
Can you elaborate a little bit on the water rights? Like I know that's a very important piece.
I can't elaborate. Just know that and I know that it is an important piece, and we're working on it. And I think we have some solutions. We just need to get pen to paper and get the agreements in place. But we've identified for the most part, the adequate water that we will need. And like you say, it's one thing that people will be looking for, and we hope to have announcements on that.
Okay. If anybody has a question for Graham, please ask to speak, and I'll activate your mic to ask a question about surge battery metals. Let's talk a little bit about more about the clays versus the hard rock, Graham. For people who don't really understand it, like let's say a hard rock deposit has an average grade of 1%, and the clay deposit has an average grade of 0.3%. Well, what are some key aspects in understanding the economics of the two, like the processing cost, the mining cost, the maybe the mining style, just so people can get a better understanding of clay deposits.
Yeah, Robert, that's a great question. I think I touched on it earlier. I mean, you're selling a concentrate when you're digging spodumene deposits. You're not getting the high value. You're not selling a lithium carbonate, so you're not processing it. You're basically digging and simple refining and then shipping it off to China to be processed. The clays are more akin to the brines, actually, where the brines you're pumping up and then concentrating down to a 2 to 3% solution and then sticking it through the processing plant. And that's basically what we're going to be doing with the clays is digging it up and then processing it, getting it down to a solution that we can put through the processing plant. So the analogy is more akin to, brine extraction than spodumene and hard rock extraction, to be quite honest. And they both have their pluses and minuses. Obviously, the capex portion of brines and clays is higher because we're putting in the plant to do the processing. That's the minus. The plus is we're going to be getting a much higher value for our end product than the clay producer the hard rock producers get. So it's a cost benefit analysis that people will undergo, and I'm sure this PEA will show you that this project is extremely robust economically.
I'm looking at slide 7 in your presentation where you show the basically the pit shell and the grade. It's obviously higher grade, very close to surface, and then it gets a little lower grade as you get deeper, and then it seems like the grade might pick up again at the bottom of the
Yeah.
pit shell. How important is that to the economics to have that higher grade right up at surface? And also, what are you looking at in terms of the potential mine life here?
Well, great questions, because like anybody who's in the mining business who puts up a ton of money to put something into production, you want to get your money back as quickly as possible. And that's the beauty of this deposit, is that the highest grade is at surface. And we anticipate mining the highest grade in the first 8 to 10 years and getting all the significant cash flow and payback up front. So it's extremely important that our high grade is at surface, and that's going to allow us to have better economics in the PEA, which we'll show you in the first quarter of next year. Going forward, I mean, we have a 40-year mine life right here with all the high grade. So if we come out at, let's say, what Thacker is, 40,000 to 80,000, we have a 40-year mine life already in this deposit. It's going to be multi-generational. Whether we get down to that second layer depends on the future and the prices. But at this point in time, the high grade portion that exists on surface is sufficient to fund and keep a 40-year mine life, which is really key, because that's what your mining plan is going to be based on.
Okay, wow, that's a long-lived ore body. That's
Yeah,
really
it'll be around
impressive.
longer than me.
How long will it take to mine through that high grade at surface?
Well, right now, if it depends what cutoff you use, but I think Sprott pulled out 4,000 ppm. There's at least 20 years there, so we'll come out with those numbers in the PEA. But most of the guys right now are looking at the resource, and they can see there's adequate mine life and really, really key, robust economics in the first 10 to 12 years. So it's fairly unusual to have your highest grade at surface, by the way. Most deposits leach, and as an example with Thacker Pass, they're digging higher grade resources from below and blending it with the surface resources to get to their 3,200 ppm head grade. So we don't have to do that. It's all on surface, and that's one of the really, really interesting things about this deposit, that that top 80 to 100 feet is the highest grade. It's a real anomaly.
Okay. So is the plan to do the PEA and then go straight to a feasibility study?
At this point in time, yes, because we think we can, get the PE out in the first quarter, get the next round of drilling done next year, and concurrent with the drilling, do the engineering and met work behind the scenes that'll allow us to come out with the feasibility in the first quarter of 2026.
Okay. And again, if anybody has a question for Graham, go ahead and ask. I've got a few minutes left here, and I got at least one more question for Graham. What would you, like, how would you characterize it that sets Surge apart from some of your peers? Like, for example, in the sector, we've seen former high flyer Patriot Battery Metals drop from $16 a share to $3 a share in the last year and a half. A lot of your peer group is down 80 to 90% since their 2023 highs. It's been a bleak 2024 for the lithium juniors. But what sets Surge apart, and why is this the company that you're betting on?
Yeah, that's a very good question. I mean, we're not immune to the downdraft in the sector. Obviously, our stock is off as well. What you're looking for now is, I stated before, the cure to low prices is low prices. And now when people wade through the sector and which horse you want to back in the lithium space, these low prices have sort of distinguish, cut the wheat from the shaft, so to speak. And now what will remain are the quality projects. And I think if I can show the investor that this is the best quality lithium project that's worthy of an investment going forward, I think we have done that by de-risking it and coming out with this resource. I will further prove that this is the one you want to back when we come out with the PEA. And look, the sector will rebound. It always does. EVs aren't going anywhere. We're here into a multi-year generational transition here to electric vehicles. It will take time, but if you look out to 2035, 2040, the demand for lithium far exceeds the supply, and we will need good supply coming on stream. We will need domestic supply. So if you drill down into good domestic lithium supply opportunities, this one will stand out.
All right, final question, Graham. How important is it that your ore body is in the USA?
We're fortunate, extremely important, thanks to the Inflation Reduction Act that states that, to get a rebate on your electric vehicle, the components must be sourced and produced in the US. The batteries must be made in the USA with the components of the battery being domestic. And there's only one small producer in the US, Albemarle Silver Peak. There's 400,000 tons of demand in the US being supplied by 5,000 tons of supply. There's a big gap between domestic supply and demand. And we need five of these projects to come on stream. You've got Lithium Americas, Century, us. You'll need a couple more, but I'm pretty sure that at the end of the day, we will be one of the solutions.
Okay, and I actually came up with one more question. It's always an important question to ask a CEO, a chairman of a junior mining company. What are your funding needs to put out that PEA by March of 2025? Are you fully funded for that, or you think you're going to have to finance again?
No, we're fully funded to get the PEA. We're fully funded to get to that stage. We've incurred most of the costs to date with the drilling, going through the engineering right now. The next milestone will be once we get the plan of operation. That will entail a much more expansive drill program, around million worth. The engineering that goes into the feasibility will be expensive, so we will be looking to secure funding post PEA to fund the next stage of development to that bankable feasibility.
All right, perfect. Graham Harris, Chairman, Surge Battery Metals, thanks a lot for your time. Thanks for tuning in, everybody. And this will be up on my YouTube at Goldfinger Capital in the next couple of days. Have a great day.
Thank you, everybody.
Cheers.